Hello and welcome to One-on-One on Plus TV Africa. I am Irene Ubani. Financial understanding is increasingly a necessity with the sporadic rise in financial technology, which is unavoidably a part of our everyday life. However, some individuals still grapple around trying to access loans to either start up a business or a project. To speak with me on financial literacy and loan accessibility is the CEO of Page Financials, Mr. Segun Akintemi. Thank you very much for joining me in the studio.
You're most welcome.
Let's talk about the financial space for a bit. Taking a holistic view about the average Nigerian, what would you say their understanding of financial literacy is?
Thanks for having me. I see the financial space as very interesting. Very interesting from the perspective of the fact that an average Nigerian has, from time immemorial, been quite educated in terms of understanding how to manage their finances, right from our forefathers. So it's not so much that we don't have, we're not educated. It's actually trying to define what financial literacy is and taking it a step ahead. I would say an average Nigerian has a basic understanding of what to do with money. But the issue we have is how to actually manage the money for increased, much more returns in terms of what they generate. And that is why there's been so much education about teaching people the art of savings, teaching people the art of borrowing to be able to grow your business, and a whole lot more. So looking at it from the perspective of an average Nigerian, I think we are way ahead of a lot of our peers across the world.
And would you say that we do more of savings than investing,
Savings is a bit relative. An average Nigerian probably, I would say, probably will save much more than actually borrowing. There's a phobia for borrowing. There's the element of arrogance, because anybody going to borrow money has to actually first, I'll say, reserved. So to go to someone to say, borrow me money, it's something that defeats the purpose of an average person. So borrowing has not been predominant in our society. One, for the individual perspective, but more, I think, for the non-availability of the avenues to borrow from. So, but that has happened. The landscape has changed, I would say, significantly in the last couple of years, and there's more access to funds now.
Talking about Page Financials, we know that you're into, giving out of loans. What exactly is the structural framework or model used in Page Financials?
With Page, we don't see ourselves as a loan company or a lender. We see ourselves as a retail financial institution using technology to drive our processes. And in simple English, it's a one-stop shop. You can do everything from your basic financial services, borrowing, investing, and actually do your day-to-day transactions. Today, Page is probably the only institution amongst our peers that run a very active and viable mobile app, which allows you to do every form of transactions.
When you say every, would you give us like a holistic scope?
From investing, from payments of any kind to any bank within seconds, to bills payment. And when I say bills payment, any form of bills, from your water rate to your DSTV to your electricity bill, everything can be done on your mobile app. And we even offer a whole lot more, particularly when it comes to customer interaction services. So you can we have an online mobile chat, which would enable you're stuck somewhere and you want to chat with somebody, you could actually chat on your mobile app. So it's quite interactive. So what we try to do is focus on customer convenience. So customer convenience drives the kind of product we offer. So in totality, what we've done is to try to bridge the gap which an average person, the services an average person doesn't get from the financial institution, and you have you get a personal attention with Page.
So what's that one thing that really distinguishes Page from the average bank that we see,
I would want to point here that we don't see ourselves as a bank, and we don't want to behave like a bank. We want to behave like a service provider. So what we're providing is financial services. So it's what distinguishes us very, very clearly ahead of any form of competition is the service we provide, and the end-to-end nature. So we are able to see ourselves as an institution that enables you from of course, someone just starting work all the way to the pensioners. So we have a service, we have every form of service suited for everyone along the value chain. And it's from whether you're trying to build a home, whether you're trying to build a career, whether you're trying to actually prepare for the future. We give you that comfort in terms of every form of financial service you might require.
All right, and then I know that some people always want to get loans, and then sometimes they bother about the fact that the cost of getting a loan in banks, for example, is quite outrageous. What differentiates me coming to get a loan from Page, and how long would it take? Some people try to avoid taking loans because of the time it would take.
You see, the most important thing when it comes to taking a loan for an average person is the time to money. That is very critical. And the second is convenience. So quite often all over the world, it's not so much of the cost of the money. It's actually how quickly can you get it, and what do I need to get it? What we've focused on for us in Page is the fact that we ensure that you get money with all your documentation. If you're an existing customer, you get money within minutes. If you're a new customer, you get money within probably maximum 60 minutes once you have your documentation. And what we've done is to automate the process. So by doing that, we've solved the second problem, which is convenience. Now, an average person, we probably have more than the average Nigerian carries an Android or an iPhone. So meaning that you have access to the internet, meaning that you can download an app, meaning that from the app too, you can initiate an account creation process and also apply for your loan straight there, upload your documentation, and you get a response within seconds. So we've created a very convenient atmosphere for you to actually access money. So I'd say that yes, in terms of accessing loans, we've bridged that gap. And Nigerians, an average Nigerian can now boldly say that yes, I have some partner who would always be there for me in terms of my financial needs. So as you access the loan, you generate funds. We also teach you the art of also reinvest in that fund. So you're able to also start making money, not just paying the interest on your loans.
And I don't know if you would be able to speak on behalf of other financial institutions on the reason why the cost of accessing loans on these other platforms happen to be almost impossible for some people because of the returns that are being expected.
I'll break it into two. There are two sides to it. An average person getting a loan who's a salary earner, and of course from the perspective of an SME who walks in and wants a loan. For the average salary earner, accessing a loan now has gotten way easier. And of course, the cost would keep coming down. But the reality is that you should also look at it from a perspective of even how much they are getting money. On average, the big banks, for instance, have a large network. They have access to cheaper funds. They get money at, they get savings deposits at 3%, 4%. For the players in our sector, they cannot raise money at those costs. So they have to pay a premium. And considering the fact that they are also classified as other financial institutions, it also creates the need to actually put a premium on anybody giving them money. So if I'm taking money from a market, I'll be taking it at a premium compared to the other institution. So there's also an increased cost. But for the average salary earner, it's not so much of a problem. For the SMEs, it's tougher for them because there are quite a few issues that they have to contend with. A lot of them don't have deep understanding of financial management. So in terms of managing their finances themselves, it's a problem. A lot of them take also for granted what we've been able to do as a country with our credit bureaus. Our credit bureaus have done a fantastic job in bringing a lot of data into the system. And we tend to forget that the credit bureau would be a reference point for anybody lending us money. So a lot of us probably have, in quotes, misbehaved in the past, and now it's catching up on them. So all those things actually increase the cost of borrowing people money. So if the higher the risk is, the higher the rates, the cost of borrowing. So with SMEs, for instance, the risk is higher because you're not sure if the person has a deep understanding of the business. So why should I, for instance, borrow you money?
Consistency of cash inflow, unlike those that are earning.
Exactly. So it's not consistent. You know, so business is good today, tomorrow is not good, and you have a fund.
And their
loans you have to
financial
pay
records may not be as up to date as expected.
You know, misinterpretation of turnover for profit, for instance. So there's so many factors when it comes to SMEs. But once you can understand and actually handhold them, which is what we do in Page, you need to learn how to handhold the SMEs. And it's about handholding them to success that would determine the kind of growth we would witness in this country.
I'll need you to speak about the handholding, but that'll be after the break.
Okay.
We'll take a quick break now. We're still watching One-on-One on Plus TV Africa. Stay with us. Thank you for staying with us. You're still watching One-on-One on Plus TV Africa. How do you hold SMEs on the hand to ensure that they do not fail?
I think the starting point is understanding the nature of their business and their finances. What happens is that quite often our SMEs tend to be in a haste to walk when they should be crawling. And understanding their business is a starting point. And the general example that I give is the fact that, you know, if you want to set up a poultry, for instance, you have to understand the art of selling eggs. So if you don't know how to sell eggs and you want to start a poultry, then you're going to be in trouble. So everything has to be almost well stage managed. So a lot of the SMEs are, I would say they are seeking for quick wins where they should actually be developing the business. You have to think big, but you have to start small.
I think that a lot of people get it wrong.
Yes, so we would have to take you through that process. So a lot of times an SME comes and says, oh, I need 5 million, I want to take a shop on our Law Road. But the reality is that how much have you been able to sell when you were in Lekki Phase 1? So you need to start from somewhere. And we tend to even use ourselves as Page, as a storyline for them to realize that, look, we started off from a very, very small location, and today we've scaled up, and we're still growing. So again, understanding where they are in their business is one part. Yes. And then the financial education, which is about asking them to first understand what they need. 90% of the time, they don't even need what they're asking for. So you have to come down to the basics. A lot of SMEs sometimes need to just think through what they want to do. 90% of the time, they don't even need cash. It is first creating value. And you know, value is something a lot of people don't even understand, but they have it in them. So it's about opening their minds to identify where the value drivers are in the business. So it's not everything you need a loan for. You could actually even start building brand equity from very, very little things that you do. So all those understanding put together. So it's not so much of them coming in and they say, oh, they want 1 million, they want 2 million. I will say, okay, here you are, where's the security? No. It's not so much about security lending, which is one direction that a lot of our businesses have gone to. And the reality is that a lot of people don't even have the security to pledge. So it's not so much about security, it's about understanding their business and actually following through to ensure that they're able to generate enough to cover their overheads and, of course, the next level, which is to make good profit.
In Page Financials, is there an opportunity for people who do not want to loan now, but then they want to invest pretty much?
Oh, yeah. Like I said, we deal with the end-to-end of the financial value chain. We take investments, we deal with investments, and we also help you build up your investment. It's not what you call, something similar to what you call a target savings, but something that ensures that you're able to grow your revenue, your investment on a regular basis, whether on a monthly basis, you're able to get returns, you're able to get value from your investments. And we also provide a lot of investment advice. Investment advice from the perspective of what are the other opportunities or what are the other areas of the market. And this is not being selfish, not just investing in our own notes, but investing in even other notes that we find very interesting in the market. And even giving financial advice on even up to, okay, what should you do with your funds in terms of breaking it into different tiers of the economy? Or even, should you start looking at doing some FX investments? You know, a total investment advisory service that we offer. Because it's something that a lot of people don't pay attention to, you know, and where you understand how to manage money, it gives you a totally different perspective in terms of comfort of life.
That's interesting.
Yeah.
All right, so I know that if you're in this kind of business, there will definitely be issues of, you know, non-performing loans. How do you manage non-performing loans?
I'd want to start by making it clear that we are, not by luck, but by dint of course, ensuring we follow due process. We don't have a lot of non-performing loans. And that is driven on the back of the fact that over time, we have taken our time to focus on understanding our customers before we even lend them money. So we can almost predict predict a bad loan before it even happens. We deploy the best technology to analyzing individuals and analyzing people's credit history. And I would say that we've done a lot in terms of analytics to give us an edge and also hedge against a lot of the risks in terms of non-performing loans. And even taking it a bit further, what we actually do is that, yes, because we have a bad loan doesn't mean we strike the person off and we write him off for death. What we do is also to almost stay with you to say, okay, yes, you can't pay now. What are you doing? Do you want a reduced monthly repayment? Do you want us to give you a holiday? You know, so we work with you until you're able to repay. So I think first managing the person from the point of where they either lose their job or their cash flow, they have issues with cash flow, up to the point of where things actually improve. And if you stay with them, we've witnessed someone who was classified as a bad loan actually end up being one of our big depositors. So things transform, and he's forever grateful for the fact that we actually stood by him. So it's important that you first deal with identifying those that have good credibility, meaning defining who a good customer is. Then, of course, ensuring that you're able to also be with them while handhold them while they go through that process.
And how well do you think we're, you know, engaging the concept of financial inclusion in Nigeria?
I tend to have not a different perspective, but I tend to have, I come from this school of thought that financial inclusion from the Nigerian perspective has become a buzzword as against the reality. Because the truth is that financial inclusion is something, it's more of a social investment. And it's not an investment that really financial institutions should be getting involved with. If you're talking about financial education and financial literacy and campaign, yes, they can. But you cannot be a financial institution and be investing in financial inclusion and expect the kind of returns you want to get. So for me, financial inclusion I see as financial literacy and education and opportunities to actually engage people and also teach them how to improve. And it's a social service.
So you mean some of the models that are used for, the models should be kind of different for those that are
It should be. It has to be, because it's a social service. It's not a financial service. It's a social service. So until we start seeing it as a social service, we would be using a totally different strategy
approach
to solve a problem. So, but I'd say that the central bank has been very active with this, and I think the central bank has a clearer understanding now, because I think sometime last year there was an assessment by one of these world organizations which came up with the fact that it looks like we're actually losing steam in terms of pushing financial inclusion. And I think we've gotten it right now, and we're trying to focus on the education, focus on the literacy, the level of understanding, then before you start talking about actually lending money. So if you go down to the rural areas, the problem is not so much of the fact that they want to borrow money. They're actually doing business, but to be able to use the same business to generate more turnover is what they don't understand. So they eat what they get, and it's just a cycle. So you need to open their minds up to the opportunities they have, and then once they understand that, growth becomes given.
All right, and finally, what are the challenges that financial institutions like yours would say they're facing, and if solved by the government, or there's the kind of help that the government would support you with or make things better?
I'd say probably just one or two. The first is funding. Funding being the type of funding that is commensurate with the kind of business you do. Largely, most institutions within this sector would probably be getting funding from investments and as against long-term debt. So what we find is that we're using short-term funds. Yes, we're borrowing short-term now, but gradually we're growing. But the second more important issue is actually skills. Getting people with thorough, deep understanding of the business. That has been fundamental in the last couple of months, and it's something that we are trying to deal with. We're trying to train people. You have to train and retrain people to understand what you're trying to do and actually see your vision with you. The third really is data. Data from a perspective of people respecting our credit bureaus. And I'm so excited that our credit bureaus are now getting very, very relevant. So for instance, if you have a bad credit history, there's no way you get a dime from Page. And I'm glad that a lot of people in our sector are also pushing it. But fourth, again, I would want to say that I think we have very poor legislation to people that default. It's almost as if an average defaulter is encouraged to even default more, because there are no laws that actually guide and enforce the defaulters, that enforces them to pay, that compels them to pay. You have a few laws where they say, write a check. If your check bounces, for instance, you are going to be held liable, you're going to be arrested by EFCC. But a lot of those things, there are no laws that makes it easy for us as borrowers to be able to enforce rights on the lenders that default. Sorry, the borrowers that default. So it's a problem. It's a big problem for us. So those things are things that some are within our ambit that we can deal with. Some are on the side of the government. Some are on the side of the regulators. Well, I would say that central bank is trying its best by creating different tiers of institutions and what they can do. And of course, you'd witness, you probably are aware of the recent increase in share capital of the microfinance banks. So that also is it's going to be a stimulant. Also, of course, ensuring that you have very strong institutions that would be able to weather the storm into the future.
All right, and then finally, do you think we're totally ready for the financial inclusion market?
From the perspective of financial institutions today, I would want to say we are way ahead of our peers across the globe in terms of the capacity to provide service. The problem we have more is the orientation of the people and the ability to actually continue to bring them into the same market where we operate. If you look at the number of accounts, distinct accounts that exist in financial institutions vis-a-vis what is available in the market, but we should ask ourselves again, it isn't everybody that should come into the formal sector. We could actually take services, basic financial services, to the informal sector and provide it for them within their own environment. So there are different tiers, for instance, of accounts that you can open. The CBN has made this easy. So that has created somewhat an avenue to ensure that as much as possible, you capture people and you give them the education that they require. That would actually drive growth for them. And for me, my own orientation is very simple. Financial inclusion is something that it's a journey. And it's a journey that we must ensure that we stick to the focus, not for immediate returns. If we focus on returns in pushing financial inclusion, we failed. We should focus on ensuring we add value to those we're included into the financial sector.
All right, thank you very much for joining me.
Thank you very much. Thank you.
And that's all. Thank you for staying with us. Don't forget to subscribe to our YouTube channel on Plus TV Africa. Also, you can also find us on Twitter, Facebook, and Instagram. Have a nice day. I still remain Irene Ubani. Thank you for watching. Bye.